This is all about Bitcoin, a show dedicated to all things questions and markets related to Bitcoin, little b for the currency, and Bitcoin, big B for the network. A collective journey to understand, apply, and use this innovation, all Bitcoin, all the time. Let's have a live look at Bitcoin right now. The Coindesk Bitcoin price XVX index is at $41,304. Bitcoin sliding about 64 basis points over the past 24 hours. The most reliable reference prices for institutions since 2014 are now published under the Coindesk brand, trusted globally as a leader in crypto news, events, and data.
The chart of the day is brought to you by Crypto.com, the world's fastest growing crypto app.
Bitcoin appears to be set to end the seasonally bearish month of September on a negative note because of instability in global financial markets, as well as regulatory concerns and China's decision to ban crypto businesses. And in this chart tracking Bitcoin as well as Ethereum monthly returns, you can see Bitcoin's climb and declines in yellow. April, May, as well as June, not so great months. So September is now also headed to be a monthly down month. And its biggest monthly decline since May at about 10% of a decline there, according to Coindesk 20 data. The positive market sentiment seen at the start of the month, the month, was bogged down by renewed regulatory fears stemming from the U.S. Securities and Exchange Commission's attempts to stop the NASDAQ-listed crypto exchange Coinbase from launching its lending program, offering 4% annualized yields. SEC Chair Gary Gensler doubling down on his call for crypto regulation and comparing stablecoins to poker chips. Meanwhile, China's decision to declare all virtual currency-related businesses illegal and turmoil in its property market have been adding to the pain. Joining us now to discuss is Coindesk Director of Data and Indexes, Galen Moore in Boston. Good afternoon, Galen, sorry. So as you saw, the chart was drawn up by the wonderful Coindesk research team. China, once again, pulling the markets down. How low will it go, Galen?
Well, Christine, I think the effect of this latest China, round of China regulatory action has been somewhat muted, and I don't think that means that we should discount what Beijing is doing here. They are making progress toward maybe perhaps a more coherent, more clear regulatory regime when it comes to cryptocurrency. And it looks like from the way that it's being positioned, it's going to be a fairly draconian one. So I don't think that should be ruled out at all. I think, there may be a sense in which investors have looked at what's happening there and have said, oh, this is the, same old thing again. But I think, the sort of,
Right.
The way these patterns tend to play out is that after the press release hits, you see who's allowed to come back in and operate. And so, remains to be seen to what extent exchanges and on-ramps and off-ramps will be allowed to come back into the kinds of activities they were involved in before.
Well, as soon as the news hit the wires, folks on crypto Twitter were saying, oh, well, we've seen this before. And Bitcoin always finds a way, crypto always finds a way, because you can't shut down the internet. But it does seem that this situation is much more serious, akin to banning banking payments in 2013 or banning exchanges in 2017. So as you say, we're yet to see how serious it will become. We see that China is making moves. They're shutting off crypto-related WeChat groups. We have that report out on Coindesk right now, as well as Bitmain is removing operations. Alibaba also ending manufacturing of Bitcoin mining equipment there. So there certainly is some action happening, and China always does find a way. I mean, so we'll see what ingenuity they can come up with.
No, honestly, I mean, Christine, you've looked back to May, the mining ban then, that was, I mean, as the chart we were just looking at shows, right? The price action on this latest news is nothing compared to what we saw in May. But since May, we've seen some of the miners that were shut down or that left China sort of starting to turn back on, according to Coindesk's reporting. And, I think, our analysts and reporters are also saying now, like, look, don't This is a serious action. This isn't just a press release to cool down the market. And I think, again, like if we look in the next few months, who's allowed to come back in and participate will be a critical question.
Mhm. And in this chart, we see BTC monthly returns compared to ETH monthly returns. Any correlations there?
BTC and ETH continue to be strongly correlated, and I think we'll get a little bit into that later in the show, perhaps. But despite the, you see the outsized returns for Ether there in the red in January, and outpacing Bitcoin in 4 out of the 9 months, the 9 positive months here, among the positive months rather. It may be surprising for some people to hear that Bitcoin and Ether are still so tightly correlated. We're used to the narrative now of declining Bitcoin dominance, and certainly it seems that institutional and professional investors have taken a real solid interest in Ethereum and Ether. This has been the year for that. The question is, I think, is Bitcoin still a representative investment when it comes to cryptocurrency? If you just look at this year's returns alone, perhaps not. But if you look back to Q4 2020 and Bitcoin's outstanding run there, I think you begin to see a broader picture and understand that Bitcoin actually still is the blue chip of blue chips, and really the gives you exposure to the market in a way that other currencies don't.
Yeah, just taking a look at this market cycle on the chart here at the beginning of the year, we saw growth driven by, a lot of people said, the pandemic. People were bullish on virtual companies and solutions, people staying indoors and investing in meme stocks and crypto, retail driving markets up further, including Elon Musk on word that Tesla was buying up $1.5 billion in Bitcoin on the balance sheet to hold in treasury reserves. SpaceX also taking a bite at the apple, and Tesla eventually selling 100 million in Bitcoin worth of Bitcoin in profit later on in the year to show that BTC had liquidity. And then Bitcoin, then Elon said that Bitcoin is actually not good for the environment in May, where we see that initial price decline. And Tesla said that they will not accept Bitcoin for payments. We saw the price crash from that $65,000 high, and it hasn't really recovered since. And then over the summer, we see China banning Bitcoin mining, and how now in September we see a renewed China ban on trading. So, some folks say that the fact that it did not fall as much as in the summertime shows, or rather, early on the year, that perhaps Bitcoin is stabilizing and shows a more maturing market. I also have a chart for you on the quarterly returns chart. And the fourth quarter tends to outperform, especially in December. September, not so much. Wondering what your thoughts are.
I think, sometimes if you look at the price pattern of Bitcoin, you tend to see this sort of, a surge and then a fall back and then a surge again. And those patterns can play out over longer and or shorter time periods. If you look at the past few months, we certainly seem to be in a bit of a lull in terms of that pattern repeating itself. But if it does repeat itself, you could certainly see another Q4 like the one we saw last year or in 2017. I think the things to look for on the macro front are, as we discussed last week, Christine, it's a bit of an unstable situation in the world right now, and geopolitically that has tended to, geopolitical instability has tended to benefit Bitcoin. Unclear how things are going to shake out between the U.S. and Europe, between the U.S. and China, between Europe and China. The Middle East is up in the air with Afghanistan withdrawal. So I think, any of these events we could be talking about in the next few weeks, how they impacted the price of Bitcoin. But going back to your points about, retail traders in the pandemic, I think, look, it's about time we start talking about how has Bitcoin impacted the rest of the markets. I mean, for example, the rise of options trading and the influence there among retail investors is noted. And I think you can draw a direct line from that, or at least a dotted line, to note that, crypto investors have for some years now been trading in offshore markets and derivatives in a way that you don't see in the traditional equity markets. I think, to some extent, the rise of meme stocks, the rise of derivatives trading. A lot of those, you can draw a line from those to activities and habits that traders and investors picked up when they began to invest in cryptocurrencies starting in about 2017.
hmm you mentioned macro factors. So the S&P 500 fell about 2% on Tuesday after a vote on a stopgap spending measure in Congress, coupled with debt ceiling suspension. It was blocked in the Senate. And there's a continued sell-off in stocks that could weigh over Bitcoin. So are global macro factors, a sluggish global economy, also things to watch out for? You have a chart on Bitcoin's correlation with ETH, the S&P 500, and gold. So it appears there's a pattern here.
Yeah, the English major sees a pattern, the math major doesn't. I mean, you look at the sort of flow, the up and down of the S&P day to day, and the up and down of Bitcoin, and they do seem to track together many days, especially when you have these kind of interest rate driven changes in the S&P. But the tail of the tape is still that Bitcoin is an uncorrelated asset when it comes to stocks or gold. You can see the line here hovering near zero for both. That means they have no relationship to one another at all. Whereas, at the same time, as I was saying earlier, Bitcoin and Ether continue to have this really strong correlation. And this is a correlation, by the way, this is a 90-day correlation of daily returns for both. Correlation numbers always are sort of useful to a point. But I think at least in this case, you can say that Bitcoin continues to hold up to the narrative of being an uncorrelated kind of portfolio component, and something that investors who are looking to build a portfolio can look at in that way.
Yeah, because I want to say, was it last week that we saw a big dip in Bitcoin, and that was amid a global equities crunch. But if you take a look at the bigger picture, to see that it is actually uncorrelated is really interesting. So in Bitcoin, who are the sellers? Is it new investors who got in during the frothy takeoff, or are more battle-worn hodlers taking profit right now?
I think that's in terms of like long-term or short-term. I think one thing that seems to be apparent, at least right now, and you can see it kind of in the way different prices move, is where retail investors are going versus maybe more sophisticated or professional investors. While Bitcoin and ETH, as we were just discussing, are down, our worst month since May. Okay, well, May was really bad. And it's sort of cruising toward a double-digit down month here for both. But if you look at some of the hotter, kind of frothier retail currencies, and I'm specifically thinking of like among the top 10 by market cap, specifically thinking of Cardano and Binance Coin and Doge and XRP, those are all down those are all down worse than Bitcoin or Ether, particularly Cardano, Binance Coin, and Doge down into below 20% returns on the past 30 days. And so I think when you look at those assets doing worse than Bitcoin or Ether, you start to say, well, maybe there's a kind of a retrenchment among the retail investors who kind of piled into those assets. There's some profit taking happening there.
Interesting.
And at the same time, I think you're starting to see projects that have maybe more technical credibility starting to benefit, and that specifically, I would look to projects like Solana and Avalanche. That do have a lot of word of mouth credibility among developers. Benefiting and
Galen,
doing well over the past 30 days.
We have to take a quick break, but stay with us. Coming, we'll have continued discussion with Galen on the latest Bitcoin news, headlines, moving the markets. Welcome back. All right, Salvadoran President Nayib Bukele posting a short Twitter video of workers installing a shipping container full of cryptocurrency mining rigs at a geothermal power plant surrounded by thick jungle. The president tweeting, quote, first steps, hashtag Bitcoin. There is still a deep vein of skepticism about El Salvador's Bitcoin project, but taken at face value, the video shows progress towards its second stage. The first came in September when the Central American country made Bitcoin legal tender. Now we see their second iteration of the Bitcoin experiment, creating nodes. And the implications, not just for crypto, but for geopolitics, could be huge. El Salvador sits on the edge of the Pacific Ring of Fire and has 20 potentially active volcanoes, according to volcanodiscovery.com. They run the length of the entire country and have been harnessed to generate 21.7% of the country's energy, according to the U.S. International Trade Association. And even this large proportion represents only a fraction of the energy that could potentially be drawn from El Salvador's volcanoes. All right, and taking a look to our next story. Our next story is with the ETFs. Let's take a look. All right, so, Volcano, pardon me. Okay, so Nayib Bukele, again, tweeting Volcano, once again expressing his interest in that second stage of the Bitcoin experiment to get volcanoes into using volcano energy in mining in the country. All right, taking a look at the Bitcoin ETFs, we have in other news, SEC Chair Gary Gensler reiterating support for futures-based Bitcoin ETFs in prepared remarks for a Financial Times conference, striking a similar tone in August and igniting a rush in tailor-made ETF filings. Within the next 40 days, 6 futures-based Bitcoin ETF applications will receive the first response from the SEC, says Arcane Research. And joining us now to discuss again is Coindesk Director of Data and Indexes, Galen Moore. So quickly, Galen, a Bitcoin ETF, Van Eck is the next Bitcoin spot ETF due for a decision on November 14th. Arcane Research saying the verdict for other funds will follow shortly. They expect that there will be action in the market running up towards these dates. So what are the chances of a spot ETF getting approved compared to a Bitcoin futures ETF?
Boy, that's a tough one, Christine. I think, if I would say, like, just in general, the chances of an ETF being approved have declined from what you might have thought they were at the beginning of the year or at the beginning of Gary Gensler's chairmanship of the SEC. But that's really, just reading tea leaves, I think, on everyone's part. I think the market agrees and would prefer a spot-based ETF product. But, if the regulators believe that this is a path to a safe ETF, then I think that's at least a step in the right direction. I do think the regulatory risk, especially with DeFi heating up, many projects out there promoting tokens that may or may not have any actual use and are probably being sold in order to raise capital for those projects. I think that sort of risk of an enforcement action against that kind of activity is one worth keeping an eye on.
And Galen, finally, El Salvador and their volcano, a good idea or bad idea?
Great idea. I just think, look, there are a lot of surplus energy sources, hard to reach, hard to transport the energy from the source to a place where it can actually be used. I'm not sure that the volcano is one of those, but I think it's perhaps a good example of how that can be done. Crusoe Energy is a US-based company doing that at natural gas flaring sites. I would love to see more activity along those lines in hydroelectric as well.
Right. It also almost reminds me of Miami Coin. We recently had the mayor of Miami on the show saying that their Bitcoin mining is rendering about $7 million in rewards for Miami, generating 2,000 every 10 minutes. So it seems to be a viable source of revenue, mining cryptocurrencies. And in this case, potentially a good way to put remote volcanoes to use. All right, Galen, we'll end it there. Thank you so much for joining me this afternoon. Thank you for your insights. That was Coindesk Director of Data and Indexes, Galen Moore. All right, that's it for All About Bitcoin. I'm your host, Christine Lee. Join us tomorrow morning at 9 a.m. in New York for First Mover, your first look at the day's global crypto news headlines. You're watching Coindesk TV.